Sure. So yeah, at that conference, Pacific Bitcoin, when I was signing books, we eventually ran out of copies because I didn't order enough, and so I started to sign hyperinflated Venezuelan bolivars as bookmarks.
Lyn Alden is a famous macro analyst, financial planner, and Bitcoin supporter, even though she is one of. Alden is one of the most respected experts in the field, and he doesn't usually say what prices will do. But the investment strategist says that Bitcoin will survive, outperform, and eventually replace the very flawed fiat-based global monetary system. Alden believes that people who have such a strong belief in the leading crypto asset shouldn't worry about short-term price changes. Even so, every once in a while we get a glimpse of someone who is really bullish. In a recent interesting chat with Luke BRS, the famous macro guru Lyn Alden was asked when she thinks Bitcoin's market cap will surpass gold's. Lyn Alden said she thought it could happen anywhere from 2 to 3 cycles from now. Gold's market cap is currently above $1 trillion, and the price of Bitcoin is slowly rising. She thinks that the leading cryptocurrency will be trading at around $600,000 per coin. Even though there are enough coins in circulation to reach $12 trillion at $600,000 each, none of the 21 million will be mined for another 117 years. Also, Alden is excited for Bitcoin to flip and pass gold's multi-trillion-dollar exchange-traded fund in market value. Alden believes that this will have a big impact on the price of Bitcoin and cause prices to rise much more than thought. Here are some clips from Lyn Alden's interview. Please watch, share, and like this video. To get more videos like this, make sure you subscribe to the channel and turn on post alerts.
Um, and that kind of, I think that alone says why I wrote the book. The fact that that happens to people is why I wrote the book, right? So, um, we're in a world. What's broke with money is the fact that we're in a world where there are 160 different plus fiat currencies, and some of them are halfway decent, like the dollar or the euro or the yen, and the long tail of them are more acutely in your face problematic, right? So if you're in Nigeria, your money supply is going up by 12 to 15% a year on average. If you're in Egypt, your money supply is going up by 20% a year. If you're in Argentina, Turkey, Lebanon, I mean, it's going up way faster. If you're in Venezuela, you just got completely hyperinflated. There are currently about 30 countries in the world with double-digit inflation officially, a little bit more than that when you measure them more directly unofficially. And the population in those countries is about 1 billion people, give or take. And then when you add in, authoritarianism, so just arbitrary bank freezes, no rule of law, billions of people in the world live in these little currency bubbles, and their money's not really accepted outside of their country. In their own environment, they're in like a little fiat matrix, right? It's like this is they're in this constant dilution. And if you're facing 20% annual money supply growth, you got to try to increase your wages by 20% a year. If you're a small business, you got to try to increase your prices by 20% a year. If you're a landlord, you got to try to increase your rent by 20% a year. If you're a saver or otherwise, just trying to hold your value of your prior years of work, you have to figure out how to not get that diluted. How do you increase that by 20% a year? And that's like a fast treadmill that everybody's on. And in the developed world, we have the same thing. It's just more subtle. So instead of 20% annual money supply growth, we have like 7%. And so it's not as in our face, but it's just like this very slow moving version of the same problem, where if we're not careful, we wake up 10 years later and we've been heavily diluted. And those who have arbitraged the money are way better off, and those of us who were not paying attention to the money find ourselves with a much smaller share, despite really no fault of our own, other than just not being like monetary experts or arbitrageurs. And that's not a healthy state of affairs. And what I argue in the book is that it's partially a political decision, but when you see this kind of thing happen globally, right? When there's zero gold standards in the world, when there's zero full reserve banking environments in the world, it's more than a political decision. It's a technological limitation. It's a damaging of the incentives in some way that technology has tilted things towards a certain set of outcomes. And what I argue in the book is that it's largely due to the mismatch of transaction speeds and settlement speeds, which was always kind of around to some extent in the kind of the 500 plus years. But really, since the dawn of the telegraph has accelerated, which is to say that we can send money around the world. We can send information and transactions around the world instantaneously, almost at the speed of light. But any sort of like bare asset settlement is slow, especially when you include verification and things like that. And so that gap has been heavily arbitraged by banks, central banks, arbitrators, and that's a problem. And that's how we split into these 160 plus different, floating currency bubbles. We basically recreated barter in the global monetary system, even though money's supposed to make it so we don't do barter. And what I argue in the book is that Bitcoin and to some intermediate extent stablecoins basically pierce those bubbles. They say, well, money's a market good, and all these monopolies are now under threat because now we have better ways to pay people or to save wherever you are in the world, as long as you have an internet connection. As long as you have some degree of development connection to the world, it's not really necessarily going to help North Koreans. It's not going to help maybe the absolute destitute, poorest places in the world, but it's this thing we're striving for is the more interconnected the world gets, we now can go around their banking systems. We can now make money a global market good again and give people more choices on how to protect their savings, how to engage in international commerce without firewalls between them, and how to hopefully over the long term, not yet, but long term, price their goods and services in unit of account that also protects them from debasement of their, income, just besides from just their savings.
Yeah, yeah, I know you have experience with Egypt, the 20% plus there, and what's that like? I'd be curious to hear if you have any anecdotal stories from that. But also, what you're describing really reminds me of what Henry Ford talked about in 1921, Nikola Tesla, Hayek, Fuller. There are many others that predicted this many, many decades ago. You're talking about the telegraph, the global connection, internet era, all that. Looking back at those very, very early people, decades ahead of their time, do you think they would be pro Bitcoin? And assuming that you think they are, why do you think that they would believe Bitcoin is the answer to what they were describing in the past?
So I do think they would. Um, Hayek said basically, I forget the exact quote, but he's like, we're not going to have good money until we take it out of the hands of government. We can't take it out of the hands violently, but we can only just introduce something sly and roundabout that we can't stop. I mean, that's literally Bitcoin. That's literally Satoshi. So he couldn't, he basically described Bitcoin before it came. Ford talked about Bitcoin backed, money backed by energy. So did Fuller. Um, some people fall into the trap of they envision something, and then if something comes along that's not exactly what they envisioned, they resist that thing. So, and I would hope that none of them would have fallen into that trap to be like, like they become like kind of salty anti-Bitcoiners because it's not exactly what they envisioned or something. But aside from that trap, yes, I think all those people would have appreciated Bitcoin if they were here and around to see it. They all had the types of minds that understood it. They understood, many of them understood the kind of perils of the banking system. Ford talked about that, and Hayek, of course, had plenty to write about that. Um, and so I think basically the shared kind of conception there is that rather than money being determined by a kind of small set of, leaders and the ability to kind of opaquely dilute one group and give it to another group, or just, kind of just arbitrarily do whatever they want without kind of much pushback. It's basically saying that money is resource constrained. And they some of them refer to energy specifically because energy is probably the purest type of resource constraint that we know of. But basically, it's a way of saying that money is honest, and energy is honest. I mean, the rules of physics are the most honest thing we have, and so to the extent that you can more directly attach money to energy, not in terms of abstraction like credit. It's one thing to have a promise. Okay, here's a banknote that's backed by something that actually takes energy to make, versus the actual money itself is efficient and fast and useful enough that it's directly tied to money itself. And of course, there still could be, credit-based abstractions and things like that. to help scale it or to help make it more convenient, but that the actual money itself has enough of those characteristics that it really kind of is hard to rehypothecate, hard to manipulate, and can kind of stand on its own 2 feet.
Meanwhile, Vank, an asset manager based in New York City, has put out its forecast for Bitcoin and other. Analysts at the company think that $2.4 billion will flow into Bitcoin ETFs in 2024. To come up with that number, the experts said they looked at the relative ratios of the Spire Gold Shares ETF and changed it to $223 in the first few days after it started trading. When analysts applied these numbers to the Bitcoin spot market, they found that $2.4 billion would flow in during the first 3 months of 2024. Thanks for watching. Don't forget to turn on post alerts and check out our other crypto movies.